Hello, welcome back to a new video, and today we will talk about the topic what is a trading strategy and how does this question come about. Very often when traders contact me with problems or with doubts, or they don't know how to proceed with their trading, I ask them, do you have any type of consistency in your trading? Do you have a strategy and rules? And then very often, to my surprise, traders say or wonder, what is actually a trading strategy? What does it consist? How can they get one? And what are all the building blocks? So today I thought I will walk you through this step by step, through all the different stages and the different elements of a trading system and a trading strategy. I will explain to you what you have to be aware of when it comes to building your own trading strategy. And by the end of this video, I hope you will have a good understanding and know how to go on. So when it comes to the elements of a trading system or a trading strategy, the first step is always that you need to be clear about what type of trader you want to be, and then everything else is built around it. So there are mainly two different parts of trading strategies or trading styles. One is on the lower time frames, it's a day trading. The other one is on the higher time frame, we call it swing trading. Day trading is usually anything below the 1 hour time frame, so 30 minutes is maybe a little bit too high for day traders, but anything like the 15-minute, the 5-minute, when we go into lower, then we go into scalping, but basically that's what we say is a day trader. When we look at swing trading, it can be the 1 hour, which is more of a short-term swing trading approach. We have the 1 hour, the 4 hour, and we have the daily. And for longer-term swing trading, then we look at weekly and monthly, but this is very long-term investing usually. So you have to be aware of what type of trader do you want to be, what type of time frames do you want to trade, and then in this context, I always get the question, what is the best time frame? And there's another video which I just recently made on our YouTube channel. Make sure to check that out. I explain step by step what the differences are between the time frames and what they mean for your trading. But it is very important in this first step that you understand that you have to make an active decision. You have to pick which type of trader you want to be. And it has a lot to do with how much free time do you have. Do you have a lot of time during the day where you can actively follow the markets undisturbedly with a lot of focus? Then usually day trading can be a good option if you have that mindset as well. You need to be a fast decision maker. You need to be emotionally stable to shake off losses during the day, then keep on trading. Or do you like this longer term, more strategic thinking? Are you good with patience? Are you good with waiting for trades? Are you good with staying in trades for longer periods of time? Then the swing trading approach might also be a good fit, especially what I've seen, it's in my trading style on the 4 hour and on the daily time frame. It is very good for people who have a regular day job. Those higher time frames usually are a good fit. You can spend a little bit time in the morning, a little bit time in the evening, a little bit more time on the weekends. And during the day, you are mostly free. You don't need to check in with your charts all the time. So you have to be clear what type of trader do you want to be. Then you pick your time frames and also analyze your mindset and your strengths and weaknesses. Are they more tilted towards short-term trading or towards long-term trading? Once we are clear about that, then it comes to picking your trading tools and defining trading rules. So when it comes to finding trades, then usually we call it that you need to have a system, or you need to have a setup, or you need to trade a specific pattern. And then you have to be clear, what does a good trade for you look like? What are the individual criteria? What are the tools do you use? For example, do you use a RSI divergence? Then what do you look for in RSI divergence? I also made another video which explains that there are different market phases. So there are trending phases, then there are horizontal sideways consolidations. We have retracements where trend following traders buy into pullbacks, for example. We have traders who like to trade breakouts. So you have to pick your niche here. You have to be clear what type of trading style do you want to trade? What type of market situation do you want to trade? Are you maybe a little bit more of a trend following trader? Then you look for momentum tools like the MACD, the RSI, the stochastic indicator maybe even. You can use trend lines, support and resistance. And then you write down a checklist with your criteria what has to happen before you get into a trade. You list it into signal 1, signal 2, signal 3. That is also something that I give all of our students when they join my course. They learn my trading system and they get exact checklist with things that they need to look for in their trading. I tell them you need to have this and this and this for your charts. For your trades, they are the must-have criteria, and then optionally to get an even better trade, you can look for this and this and this type of signal. And if you see those things on your charts, then you can get into a trade. And I trade different patterns and I trade different setups. So for each different setup, you need to have different rules. You need to be very clear about the tools you use and how they fit together. This is very, very important, and a set of rules help you be and create a more consistent approach, because you know exactly what you are looking for. You know exactly what does a good trade look like for you. That's also something that I always recommend for new traders or traders who lack experience. Just print out the best trades for you. How does a very, very good trade look like? Then you put it next to you on your trading desk, where you can see it all the time. Then you can compare, does this trade which I'm about to take look like this very good trade with all the signals? You can immediately see, yes, it does look similar, or no, there are still a few things missing, or actually it does not look similar at all. Then you can pass on it and you can get a lot of consistency with this approach. But then, of course, what is the question? Many people say, wait, how do I get those criteria? How do I get all the signals? How do I get my must-have signals? How do I get my optional signals? And where do I start actually? How do I find such a setup? And it is something, there are different ways how you can approach it. So for example, pick a pattern which you find interesting that you want to explore. For me personally, it was head and shoulders always fascinated me, where you have those turning periods. You can use horizontal breakouts. You can use moving averages. I also, when I started out, I very specifically focused on just head and shoulders and trend line breaks. I, for years and years, traded only those two things. Of course, in the beginning, your results will not be great. You won't make a lot of money, but you don't have to be in a mindset where you think, okay, head and shoulders, it's a big myth, it's a lie, head and shoulders don't work. But you really look at your trades, you try to find and figure out, why do my trades lose when I trade a specific head and shoulders? Why at other times do my trades work when I trade a head and shoulders? What are the differences? What are the similarities? And then over time you can build an expertise in head and shoulders trading or trend line trading. Hard word, but that is how you progress. You don't just trade 2 times a head and shoulders. You see, oh, okay, I did not make a lot of money. Then head and shoulders don't work, I look for something else. It's essentially the same thing when you do anything in life, whether you start a new subject, a new job, a new skill. You pick something that you find interesting, you work on it. In the beginning, of course, you won't be great, you will make mistakes, you will not get everything right, there will be hiccups along the way, but that's quite normal, you would agree here. But over time, you just focus on making one step after the other. You learn one thing this week, you learn another thing next week, and then over time you can put all the pieces together. You will see, okay, this makes sense now, and it's the same in trading. So really what I really encourage you, pick 1 or 2 patterns the most, blur out all the noise, reduce all the noise you see in social media and forums, websites, wherever. Just focus on 1 or 2 things if that's the way you want to trade. Then explore it, improve it, and just work on it for yourself. Trading is not a team sport. Trading is a one-man sport. You are the only player that is important. You have to care for yourself. You have to make sure that you are improving. So blur out all the noise, work on it for yourself. Of course, if you want to learn with me, that's possible. You can learn my pattern. I will show exactly step by step what I trade. And that's also another way to learn. You can pick up a book maybe, or whatever it is, but really make sure that you are focused in one path. Don't look left and right. Pick something, work on it, and then just move forward without distractions and work on those little things. Again, here the last point, very important. Avoid perfectionism. There's no perfect trader. There's no perfect signal, no setup. Everything will fail all the time. You cannot get 100% win rate, even 90% or 80%. Forget about this, but really focus on everything around it. How do I let my winners run? How do I cut my losers short? and then over time you can build your trading expertise step by step. You build your trading patterns and your skills, and that's how you become a good trader. That's how you pick something where you can then write, okay, I have my head and shoulders. I need a good head and shoulders with a divergence at the top. I need head and shoulders with a clear neckline. I need a head and shoulders with a good break of my neckline. Maybe I even wait for the retest. And that's how you get your signals one by one by one. Along the way, of course, you will see, okay, this signal here obviously is not helpful any way. I will just cut this signal, I will use another thing, or I will just move on with another idea that I have for this pattern. But that is how you then build your expertise, your setups, and that is how you really find a pattern and make it work. Then the next step is risk management. After you know what time frames you want to trade, what setups and what market pattern do you want to trade. Now it comes to risk management. That's very important. What is your average risk per trade? Do you want to risk 0.5% per trade? Do you want to risk 1%, 2%, 3%? There's no right or wrong. The higher the risk, obviously, the higher the variance. How much you risk per trade is completely up to you, and it completely only depends on your risk tolerance. And that is something you have to be clear for yourself. There's no trader that will give you the perfect position size. It's just something you have to figure out for yourself. Then what is your maximum risk? What is your minimum risk? So for example, when I have a really good trade where I have all my signals and all the criteria from my checklist, then I might go up to my maximum risk per trade. If I see, okay, I only have my must-have criteria, I don't have any of my optional criteria, I might go to my minimum risk per trade. Then another point is, how do you deal with correlated trades? For Forex, for example, if you trade the euro US dollar long and you see that you have a setup on the British pound US dollar long, those trades and those Forex pairs are very, very correlated. So you will likely have a very similar outcome. So you really want to be sure, how do you manage those things? And again, there's no right or wrong. Every trader will answer differently, but it's important that you have clear rules for all of this. I always like to recommend, and that's what I also do with our students, you write those things down. You have your average risk, you have your min and your maximum risk, you have how much risk are you willing to take on correlated risks, and then you have rules. And of course, at the beginning, the rules won't be perfect, but that's all right. You see, how do those rules impact your trading performance, your account, and your trading? How do you feel with those rules? And then you can make adjustments along the way after you have really identified how those things impact your trading. You can make an educated, evidence-based decision based on your actual hard numbers. Make sure that you make your own observations, have rules at the beginning. You need to start somewhere, but then over time you can make adjustments. It will be different for anybody. Also, how do you deal with drawdowns? Do you scale down? Do you take a day or a week off when you hit a specific drawdown? And how does this all fit together? The goal here is that you reduce variance in your account. So you don't want to have those huge swings where one week you're up 20%, the next week you're down 10%, and that is very, very taxing on your emotions. You need to make sure you protect your emotional capital as well, which is very important. Then the step 4, you have to define all the parameters around your trade. So it's not only about entries and having a good indicator. Many people, they will spend all their time just looking at the perfect indicator, the perfect moving average setting, and then they will forget everything else. But then they're really screwed because they don't have any idea what are they actually going to do once they're in a trade, because they've never really explored it, and then they will mess it up in the trade, and then they will think, okay, maybe my moving average was not correct, although maybe the moving average was okay, but the way they handled the trade was completely inconsistent, without rules, without discipline, and that's why they're always finding themselves in this loop, in this vicious cycle where they don't really understand why they're losing money, what is the problem in their trading, and then they look at the wrong areas, they improve, or they improve the wrong areas, and then they repeat this thing over and over and over again, and then you will have people after years in this trading business where they just don't really know what to do. They are just looking for the perfect indicator, and yeah, they're just spinning into circles. So have very clear rules for how do you set targets. Do you use a moving average? Do you use percentage-based targets? Do you use support and resistance? Whatever it is, be clear about it, have rules about it, track it, improve it. What are the things, or how do you place your stop loss orders? Very, very important. When do you exit ahead of your take profit and stop loss orders? Not always do we have to stay into it in a trade until the stop or take profit is reached. What are the clear signals that you can cut a losing trade before the stop loss? What are very clear signals that you are maybe in a winning trade, but the market is turning, you want to get out of a trade? What are the signals? What are the rules? Don't just act emotionally, but have clear, precise rules. How do you deal with news when they come up? Also very important. And the goal here is to eliminate all the guesswork, build a repeatable process which will give you consistent results, which you can then analyze and improve. Step 5, here's where everything comes together, where we look at the trader as a whole, the trading environment, and the process and routines. So especially when you have a day job, you have a family, you have hobbies, you don't have a lot of time, you need to be clear about your time. You need to have good time management, and you don't want to just rush over things. You don't want to just make your analysis during your during your lunch and your coffee break, on your phone or while watching TV or a Netflix series. Really be sure and be clear what you when you are doing something and why is it, and when. So when do you analyze charts? For me personally, I do it every Saturday morning. I take a lot of time, a few hours out of my day. I sit down with my charts one by one time frame after another, all the time frames that I trade, that I have defined in the first step. I plan and I analyze my charts. I update my levels, my everything. I write my price, my trading plans. I set new price alerts. I write my watch list. And the next question is, when during the week do you update your charts? Do you have maybe 30 minutes every morning before you head off to work, or do you have an hour after work where you update your charts? Especially if you're on the higher time frames, this comes in handy. You don't need to do this during the day usually. Just a few minutes in the morning, 1 hour in the evening is usually enough, but you need to be clear when you are doing it. Which markets do you trade? So for example, I trade mostly Forex, so I know exactly which Forex pairs I trade, which Forex pairs I trade on certain time frames. So I trade the majors on the 1 hour, the 4 hour, the daily. I trade the minors on the 4 hour and the daily, not on the 1 hour, because of volatility and spread issues. But you have to be clear about this. Whatever it is that you decide you want to trade, be clear about it, be specific about it, and then follow it. And yeah, then when do you look at charts? For example, I have the rule that I don't look at intra candles, which means that I don't look at a candle when it is still moving. I just look at the open and the closing time of a candle, just as a filter rule. So I don't want to get mixed up in this intra candle volatility, looking at my P&L, seeing the trade move up and down all the time. So that is something that I have to I establish for myself. It works well. And the goal here is that you save time, you improve your consistency, and you're organized. How does it look when you trade with and without a system, without a strategy, without rules, and all the things in place? When you have no such thing as a system, a routine, you don't know when you're doing, what you're doing, you're all over the place, you hop through time frames, you chase trades, chase price, you change indicators all the time. You look for things that have worked just in the last trade, you use it maybe to find a new trade tomorrow. Then this is a complete amateur who has no idea what he's doing. He's just hopping all over the place without any type of consistency. He's always controlled by doubts and fear and uncertainty, greed. Everything is impacting such a trader, and he has no way of really finding his way, because there's not any one thing where he can start with. There's not even one consistency in his trading, and then just looking at his results will become important, because one trade he used a MA on a 5-minute chart, then the next trade he used a 15-minute chart with a stochastic, the next trade he had a 4-hour trade with a support and resistance break, then he traded off the news. And then you look at his trading performance and you will see this is completely messed up. There's no consistency. It is all over the place. And how do you make sense of such a performance of such a trader? It is just impossible. So that's very, very bad. I hope this point comes now across. even if I sound like a broken record, but it's just so important. And I don't want that you are too hard on yourself, but be realistic and be honest with yourself. There's no real reason and there's no real other way how you can get out of this, how you can improve, unless you're really objective. Be critical to yourself, but don't beat yourself up. Be nice and talk to yourself in a way that you would talk to a person that you actually care for, and don't beat yourself up. I know people like to, or they tend to really talk bad to themselves in their own minds, and that's really bad habit. Try to control it, be objective, understand that you are not maybe on the best path, but understand that moving forward you can change things. With a system, with structures, you can get confident, you have trust because you know what you're doing when you're doing it. You have a repeatable process that will allow you to get some type of consistency in your results. Even if those results won't be great at the beginning, which is totally fine, at least you can look at your results, you can look at your trades, you can find similarities, you can find where you deviated from the plan, and then you can make adjustments along the way. And you are not really confused, you're not all over the place, you know which time frames to use, how to look for a trade, when to stay out of the market. It will also save you a lot of time, which is very, very important here. And then we can move on the left. On the right here we have the conventional, what I call hit or miss, where becoming a good trader, it is purely based on luck, and in the end it almost never works. And on the left you have the evidence-based practice. So on the right hand side, the regular trader, he tries something, he takes a random trade, he fails, he tries something else, he fails, he tries a new indicator, he fails, he tries a different setup, time frame, and he fails until he reaches a point where he's desperate. He starts the gambling mentality, over leveraging, getting into completely random trades, just hoping to hit a home run, and at one point he will just throw in the towel and quit. And that is where most people are. But you need to move to the left, where you are on the evidence-based practice mindset, where you try something, it fails, that's all right, that's completely okay, but then you analyze, why did it fail? Always look at your losing trades and ask yourself, what really caused the loss? Was it me with my behavior? Did I do something wrong? Or was it just the price action and the market at this moment, which just did not agree with my system? How could I have managed it better? You make adjustments after 20, 30, 40 trades, after you have a good sample size, and then you move on. And then you try something else, or you try with your improved method. Maybe you fail again, maybe you fail a little bit in a different way. You analyze it, you make adjustments, you try it again, you fail, maybe around break even now, then you analyze it, you make adjustments, you slightly move into profits, and you can see where this is going. And that is really how everything fits together, how you move away from this amateur mindset, being all over the place, chasing the holy grail, and really having this very bad spot where you have no real chance of becoming a bad trader other than by luck, or just hitting a lottery trade, which never is really happening. And it's a complete waste of your time. If you're honest, it's a waste of your money. And that's not really, if you are seeing yourself, that's not how you should spend your time. That's not really worth your time if that is how you see yourself as a trader. And I really hope that you take something home from this video. Maybe not everything, but just have some type of consistency, establish it, see how that improves, and then if you like it, you make another adjustment, you see, okay, maybe I like this one, this makes sense for me, and that's then how you move on. So with that, we can wrap it up. I hope you enjoyed it. Make sure to leave a comment below, give me a thumbs up. I always like to read from you, to hear from you if you like my videos, and then I will see you in the next video. Happy trading and stay safe.